Okay, guys, so I'm watching cable this morning. Everything's saying it's down, but not overly too sure with it. It's one of those trades, and a question's popped up on a scruff. So let me just fire this in so you can see it. From Alba, salute to you. Breaking down GB, yeah, I'll be watching it all day for you lot. Been working through the Trader Clinic playlist and some golden nuggets. It's what it's all about. It's you ask me something and I'll try and answer it the best I can. And this one is on carving and price bounces. In the video you mentioned that if you're not fully confident in a trade, for example a C trade, instead of an A trade, you use carving methods like holding a 15-minute using hourly fibs, etc. Is this still an approach you would use on those setups? I've also be interested to know how much carving improves ROI of a setup. Right, okay. So, let me just flick this back over and I'll explain this. What carving's all about is it's really short burst scalping. Now, if you've not got sort of a B or an A setup, you haven't got confidence that that market is going to run, okay? But it could be half decent when it's in and around a level. You will rely on the price doing this, moving backwards and forwards from the level. Now, when you're on a C trade, B trade maybe, it will bounce, okay? You take advantage of that if you want to go to market. But the one thing that you don't do is you do not run those trades because you're not confident in it. So in other words, if you think you're going to get 4 or 5 pips out of it, you take your 4 or 5 pips, you cash it out, you let it come back and you cash it out again. Now there is another way you can do it, and that is when it's starting to move, the soon as it starts pulling back on itself, in other words, a 5-minute RSI could be quite high, you take the profit out, you let the market relax, you re-enter above, all you've lost is a couple of pips, and then you go again, and you carve on your way up. Now, the price bouncing is literally in and around the level. Carving is in and around the level, or you're taking it out as it moves up. Now, when it comes to ROI of a trade, think about this logically. If you're trying to force 1 in 3 in trades and one thing and another, it becomes really difficult. Because in this scenario, you've got your 20 pips as your stop. You have to hold that to 60 pips. Well, if you're not confident it's going to get up there, you're knackered. But you could still get 60 pips out of it by taking 4 or 5 bouncing points that maybe's 10 pips each. If you're less than that, fine. So it does increase your ROI because you're constantly filling up the petrol tank. Now, is it something I recommend? Not really, no. You've got to have a lot of experience and you've got to understand that you are ruthless with the trade. And what I mean by ruthless is if it starts getting out of hand, in other words, it moves against you, you've got to be able to kill it manually and not just let it play out. That's the difference between a trade that's a day trade, which is safer, because you put your stop in, you put your target, you let it go, you assess it at the top of each hour. If you think it's stuttering, take the money out, put the order back in, that's fine. If you're looking for it to do that, or in my case, get the coffee, because we all know Scruffy likes a coffee. But if you're looking for it to do that, you've got to be in and out really quick. So ROI, it works quite well. Always work on a daily basis. You know, every day is ring fenced. So if you're looking to make 20 quid today, once you've made your 20 quid, that day ends. Then the next day, look to do it again. So treat every day individually, then calculate it all together and do every week individually, and then go from weekly into month and month into year to calculate your wages, etc. What that does for you is it stops revenge trading. Every day is individual, as every trade is individual. You'll see it sort of playing out today in pound USD because it's a very dangerous market today. So I'll be really cautious with it. So there you go. Catch you soon, kid.